We've often spoken about the benefits of long-term investing in a volatile asset class like equities. And what really matters is time in the market rather than timing the market. Over the long haul, the stock market's outperformance over cash boils down to just a few critical months. Miss those months, and you have missed all the risk premium to be earned from holding a volatile asset class such as equities. Over a 10-year period between October 2013 and September 2023, Indian stocks owed their outperformance over cash to just 12 months. That's 10% of the time frame. If you held stocks for all the 108 months apart from those 12 months, which we would call critical months, you would not have beaten cash. Similarly, we find that on an average 5 months or less than 4.2% of the time frame account for all the outperformance of Indian actively managed diversified equity funds versus their benchmarks. Active management turns out to follow the same dynamic as the market as a whole. It is thus natural that the implications for buying and selling actively managed funds should be similar to those regarding timing entire markets. The implication is that investors should not try to time their investments in actively managed funds. Staying invested is the name of the game. Actively managed funds are finding it increasingly hard to beat their benchmarks. In addition, the number of months contributing to overall outperformance versus benchmarks of these funds is shrinking. Investors are best served by identifying consistently managed funds and by staying invested. Investing based on recent performance can be counterproductive, resulting in missing critical months of performance in both newly invested funds as well as recently exited funds. If you think you've identified a skilled manager, the best course of action is to buy in or rupee cost average (SIP) regardless of the moment and hold on to the fund over long periods of time. The obvious and perhaps even most important corollary is that a fair amount of patience is required to adhere to such a program. A good manager may take a long time before these critical months materialize. Thus, don't sell based on what have you done for me lately rationale. No one knows the day or the hour when the outperformance will strike. Patience is perhaps the best virtue as an investor.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.